It's the pre-market ritual you never knew you needed. Get ready to gap and go with the Kalim Trading Institute.
All right, guys, welcome to another episode of Gap and Go. Last week, Jackson Hole sending a different message. You know, Fed Chair Jay Powell has always been, always on the hawkish side for most of the last 3 years, ever since inflation stayed elevated. Concerns on tariffs, seeing that impact, especially with PPI now accelerating I'd probably say the first time it's actually beat expectations because of the carryover from the first spillover effects from the tariff, right? And for the first time, he actually changed stance last week and I don't know if it's political pressure, but I think it's a right move also. And he was saying that, we're going to change the framework because we're probably not going to stick to that 2% inflation. And we're probably going to be looking at the jobs market and other forward-looking data-oriented. Jason, maybe you can share your thoughts about Jackson Hole first before we get into the other stuff.
Well, I think you're right. Parang this is a step change from the previous Fed stance. I said, but he's held rates for like so many meetings na, medyo hawkish. But this time, parang nag-inching towards, he said we may have to adjust monetary policy. Right? So parang opening the door on rate cuts. But I think wala pa rin sure. It really depends on two things, diba? So like number one, what he said was the labor market. He was seeing some softening in the labor market. Diba? Labor demand was going down, but labor supply is also going down. Okay, and then he's watching for the effects of tariffs over the next few months. Diba? But what he said was that tariffs are a one-time change in the price level. Diba? So like, yan naman tayo sa one-time, diba? But sabi niya, if it doesn't prove to be a one-time thing, they're open naman to, pivoting again. Diba? So parang tingin ko, yeah, step change, but wala pa rin clear path. Can be, hawkish, dovish going forward, depending on how the data evolves, diba?
But you know what surprises me is that if you look at the 2-year and the 10-year, not much movement coming from Jackson Hole. Yeah, you had a one-time reaction, but thereafter it started to stabilize. And it looks like the markets and it looks like the market's already pricing in 3 to 4 rate cuts in the next 12 months.
Yeah, and I think that's the main risk in the markets, diba? Kasi parang, okay, the market's like so confident, 3 to 4 rate cuts. But parang I think as of now, nothing is clear pa, right?
But you know what surprises me is the continued weakness in the US dollar. And what's the best way to look at it? It's like, we all know they're going to rate cut anyway, right? It looks like to some extent the dollar should have priced that in. So despite the oversold situation, the dollar, and I'll show it to you guys right now, like it just continues to remain oversold in this territory, right? We've seen this drop here because of the assumption that, okay, we're going to start rate cutting. And then all of a sudden, this oversold rally didn't pan out, still showing weakness in the dollar market. And honestly, I don't know. You could say that this drop here after that, baka bulaga lang diba? Tapos bumalik din eh. So, I'm still maintaining this stance that dollar is still way oversold, and it looks like concerns on the 10-year also look to some extent priced in also. And I'm not saying that this is going to rally. I don't think that's my point. I think my point being here is that tell me something I don't know. And it looks like Jackson Hole, despite the change in that narrative, it looks like more of the same narrative than anything else.
Yeah, I think it's really more of the same. I think when you go back to the dollar, I mean, if you zoom it out like the past few years, so what we're concerned about really is like, kasi the past few years, laki ng mga swings, diba? Once it gets oversold, right? But this time, seems like it's staying oversold. Then yan. So 2022, 2025, diba? So it had these like huge swings up and down. But these times, some things seems to be changing, right? I mean, staying oversold. And me personally, I'm also been watching for this. Parang, teka lang, it's oversold na. Ingat muna tayo. But okay, it's staying there, right?
And it's coinciding also with S&P. And you saw a big rally coming on Friday. And we talk about channels a lot. The reason why it's because the market just continues to channel, right? And there's really nothing coming as a surprise. And the longer this channels, we always tell everyone, you could see sell-offs like this happen, right? But the channel higher isn't making big moves. You guys get what I mean? Like the move higher, because it's parang hingal na, except that there's no bad news. Well, the bad news looks like it's priced in also. It's just that the move higher is just becoming smaller and smaller. I think we're seeing it across the board, right? Even in your big tech, there's some level of exhaustion. Not meaning it's going to go down. It just means that, just expect a lot less. It just needs some form of duration to unwind all that overbought condition.
Well, we discussed the last Gap&Go. I think the earnings were good, especially Mag 7. SPY, I think more than 12% EPS growth versus like 6% expectations. And actually, despite the hawkish Fed, actually liquidity has been going up. If you look at money supply growth this year, actually up, I think, about 6%. It's accelerating as well. Diba? So, parang nowadays kasi actually it's not enough to look at the monetary side. There's a lot of fiscal levers that they can do as well, to help improve liquidity. Actually, it's getting harder and harder to see, actually. Dami ng magic nangyayari.
All right. And, talk about emerging market a bit, because emerging market actually has outperformed since this drop here. And I'm sure it's correlated to the dollar. And the markets move to riskier assets. Not all riskier assets, but there's some level of rotation that's happening to riskier assets. And, the biggest winner so far has been your crypto space, actually, diba? Since that drop in April, you've just seen a huge rally, 50% on Bitcoin, more than double on Ethereum. And, I don't see something that's, what's the word for it? Scaring me so far in terms of systematic risk or over, what's the word for it, Brian? Exuberant, where everybody's just excited about the stock market or the crypto market. Parang wala pa eh. We're just not there yet, right?
Wala pa yan. I think there's a lot of outlet for the dollar as the dollar weakens. If you look at your euro dollar, parang early stage advancing. So you see, sabagay, kasabay din ng policy ng Trump admin that at least for the 4 years, weaker dollar.
Even your China yuan is like looks like it's gonna break down.
For me, like sa emerging markets, I think it's benefited from the US dollar for sure. But actually, if you think about it, if you look at the flows, actually halos lahat outflow pa yan, even though they've gone up. So I think this there's still a lot of skepticism.
Well, not in Hong Kong and China. I think if you look at the flows last 2 months, it's picked up. Well, to some extent, it's better. I think what you're talking about is Asia Pacific, like Southeast Asia. I think that's a different story. You're talking about Indonesia, Philippines. Wag na natin pag-usapan yan. Wala nang pag-asa. Wala nang pag-asa. We still have to talk about it. But I think emerging market, especially China, has been the main reason why you've seen this outperformance, right? I think we've talked about China several times.
Yeah.
Valuations, cheap, attractiveness, interest rates, new low, liquidity, pump priming, and all these things, I really believe, have built better relations with China and the rest of the world. I mean, you've seen the tariffs happening, and you've seen relations, especially in big countries. You've seen US and India. India's pissed off, right?
Yeah.
Because India is being told off, hey, stop buying Russian oil. And then India was like, you're the ones who told us to buy the Russian oil so that the oil market doesn't go to zero. So to stabilize the oil market, right? And it's just funny because you're seeing a lot of countries now start to pivot towards China. I think the only country maybe not pivoting or building better relations with China is maybe Europe, because obviously Europe and US is one country, right? But you've seen it. Australia, India, Vietnam, Thailand, where else? Even parts of Mexico, and then even Canada.
Yeah.
Diba? So I think that's some of the concerns that are
Parang bifurcated global market.
Mhm.
Parang okay, you fight me, you're pushing India, towards the arm of China, and everyone else to each other. So everyone's parang trading more with each other, diba?
and everybody, and we're all waiting for what's the tariff going to look like for China once again. You've seen a 90-day feels like kicking the can down the road. You know that feeling in 2012 where everybody's waiting for the debt ceiling? It's like we know that this is going to get resolved, except that it just gets kicking.
I think
Okay, 90 days, 90 days.
I think medyo ipit na si Trump eh. Parang you're seeing PPI inflation start to go up eh, diba? Tapos titirahin mo ng tariff. So parang tingin ko, I think it's gonna be delayed, it's gonna be kicked down the road or watered down. And pretty sure that's why China's going up, right?
So that's the question, right? PPI, and you've seen inflation, which is actually goods haven't gone up a lot. What surprised last month was more still on services, not on goods.
Yeah, but I think most of the tariffs parang August onwards papasok.
Yeah. So we're trying to get a feel of whether goods are like how big of a jump you'll see on the good side because of PPI, diba? But that still remains to be seen. It's easy to say na one time lang naman yan eh. But that one time can be very damaging towards consumer spending and confidence. And we don't know how far off we will see that, right?
And also what's important with these things is yung expectation.
Mm-hmm.
The Fed has to control yung anchor tawag yung expectations ng mga tao. Diba?
And it looks like consumer discretionary is still strong. Consumer staples is, I don't know. Will we see this actually start to break down? That's the part where we're trying to figure out. All I know is that the shoe segment looks like they're both battered. So I don't know if this is you'll see more expensive shoes, but or you'll likely see more expensive shoes land in United States. But that looks like another day, another story. Brian, we've seen some weakness across the board, especially in the big tech. There was a scare last week coming from Sam Altman and Harvard case studies about generative AI leads to 95% of companies that are in Gen AI lead to zero revenues, which is, we're not surprised, right?
Yeah. That's the right expectation for this new industry.
That's the right expectation. So everybody was worried about the capex being spent on big tech, right? Because all of them are spending $300-400 billion in total. What's your thoughts on it? And underneath the surface, are we still seeing moves, speculative excitement happening underneath the surface?
Yeah, a lot of speculative moves. But with regards to what Sam Altman said, probably the best effect that corporates can get from these new technologies is actually, sad to say, lower labor costs. No, diba? Initially, diba? You're really trying to capitalize on these new technologies at the expense of labor. I think that's about it. But in terms of getting new companies or new products into market, parang sobrang bilis eh. I don't know if the market can really absorb it. Initially, probably the companies can. But other than that, baka it's going to be same with the internet. It's going to take initially, medyo mabagal yung adoption. And a lot of boom and bust startups before everything goes really stable. But in
Okay.
terms of
Yeah.
in terms of what's moving the past week so far, we thought there's going to be a major correction. Kasi a lot of the larger cap, yung mga Mag 7 at least if you look at the crowd strikes, diba? The sizes of the crowd strike, a lot of them are late stage. That's been the concern. Di mo alam kung how long they will be correcting. So it's difficult to trade those late stages. What we're looking at are, at least if the market stays quiet, you'll be looking at your RUTs, mga Russell, mga small caps, parang looking better than your QQQs. Diba? And also yung IWC, yung BlackRock micro cap, looking better. Ito yung mga micro caps. In the list are your APLDs, diba? And your Wolves, WLF. Yan, tsaka yung yan yung mga nasa micro caps. So it's been rotating towards these companies. Probably because driven by the expectation also of lower interest rates, big part of it, lower dollar. The problem with the mga late stages, kasi parang very, not much upside if you're going to trade it.
So we always have this statement in trading that once umakyat yung mga basura, alam mo nang late stages na di ba?
In a way, yes.
Is this it? Is this?
But also positively, parang it's positive because at least the money goes, parang circles around. Kasi ano yan rotation. So after as market goes up kasi, it becomes narrow. Kasi yung funding siya, may liquidity as prices go up. Lumiliit kasi presyo market. So you need the leaders, the big ones, to correct first before it rotates, which happened. So it's kind of healthy because the system is doing it correctly. But hopefully it goes back to, but eventually it goes back to the large caps. At it has been doing the past 2 years. After nung mga, if you see your mga marijuana stocks going, yan medyo signal na medyo patapos na. Tapos pupunta na naman sa mga large cap, mga quality issues na naman. So far it's healthy.
You know, last month, sorry, not last month. This August, after coming from a double inflows in equity flows, I think last month in July we did $119 billion equity flows into equity ETFs, which is on par with great 2024. And we came from $50 billion in the Liberation Day, right? So today we're back at $70 billion in flows. So it looks like flows actually started to slow down this month. I don't know if that's, if that's a
seasonal ba?
I don't know if it's a good or a bad thing.
Seasonality also. Maybe.
Is it seasonal, Jason?
Well, mabasa kasi ako yung September, October daw usually week
Yeah, historically, it's always been the weakest.
Actually, on the AI, I don't think it's a bubble. But alam mo yung Gartner hype cycle, right? Innovation trigger, peak of inflation expectations, trough of disillusionment, slope of enlightenment. Yung mass adoption. So I think we're heading into the trough of disillusionment.
You know why I can't imagine I understand there are some companies still trading at 120 times, 50 times price to sales. For example, like Figma, Palantir. But to be fair to them, they're profitable. And you're talking about a select few companies versus majority. And majority valuations don't look that
Yeah, hindi naman.
expensive, right? I think Tom Lee always shows the equal weighted PE. In fact, we're still lower than where we were before.
Mm.
So what's really driving today has been the 27 times PE, 28 times PE is because of your big tech and your Mag 7. So, and I blame interest rates for it, right? Because interest rates are higher than it was before. Meaning, how do I get excited, put in so much speculation when interest rates are high? They're not low, diba? It's not like the feeling where Now Corporation, yung wala ka ng choice kasi alam mong basura season kasi 0% interest rates.
Mm.
Parang wala tayo dun eh. And that's the reason why na it's so hard for me to imagine after a big rally, you'll see a large drop. I mean, to see a standard correction, maybe 10-15% for me is normal. That's nothing out of the ordinary, right? It's just that will you see something systemic in a bigger crash? It's just hard for me to imagine just because interest rates are elevated, not down there. And if you look at the private equity, parang nawala. Diba? There are some pockets there are
Yeah.
some industries na mahina naman talaga eh. Diba? So it's not everything across the board.
Yeah, agree. No bubble. I don't see it also. Even AI.
Anyway, we could wait and see. In the meantime, other parts of Hong Kong and China looks like it's coming out alive. You've seen some of your semicons actually outperform. Neo and some of your other EVs now also come alive, despite weakness in the big two, which is BYD and Xiaomi. But nonetheless, you look at the other EV manufacturers in other parts of the China, looks like a lot of things look good. Even on some of your speculative stocks, for example, like your robotics and your healthcare and AI, also outperforming in recent period.
Yeah, the past weeks it has been easy to spot those alphas. Just look at their sales growth and earnings growth. Medyo obvious yung ano niya, galaw niya.
Haha.
If you scour through all the industries, mga nakita ko na, I mean, obvious where earnings are going are yung mga medical mo. I think we talked about it. Medical and yung mga drugs, mga drug and pharma. Malaki yung mga growth nila. I think most of earnings, I mean, at least on a sectoral, parang ano sila, that group is getting a lot of growth.
Okay. I think Hong Kong should still do well. I think our thesis for Hong Kong is still the same. I think you're still starting to see more rotation and more flows happen in Hong Kong and China. Now, most exciting part, which is the biggest weakness so far, your PSEI. And the good news is Changi is opening its first store here, the largest milk tea chain in the Philippines.
Benchmark lang. Philippines, the way it's moving now, is acting the way it should be. As laggard, okay?
Then, pero for me, this is already a flash out. Sumuko na.
Yeah, the funny part, like I keep on telling, I get asked all the time, right, about this. I don't know when you start the next move, right? Some people, like, let's not name names, right? But it's just, and it's normal, right? When you look at it technically, right? Nandyan na eh, diba? I tell them, look, I really, really, really want to agree with you. Except when I look at earnings and I look at consumption and I look at the Philippines, like everything is really bad. Like, if you guys can watch the 12-minute video of April breaking down the 2Q earnings, I thought that was complete. And for first time, like in her own words, it's like earnings were terrible in 2Q, coming from an election year.
So, parang ayoko na nga tapusin eh.
And it's nothing that, I didn't come as a surprise. It's just that, it's just how do you pay more than 13, 14 times for a country that is not growing on corporate earnings side? So how do you pay that premium? And you can't. How do you justify it? You can't, right? We're all just hoping that, product over na. Yeah, that's always the assumption. Okay. But until we actually see it, there's really little incentive for foreigners to come back to the Philippines, right? And I think that's exactly what we're seeing. If markets are being sold off, don't get me wrong, bumili kayo. Okay yan. Kasi may panic eh. Diba? So when it's oversold, I tell people, you should be buying, right? Except that when things are overbought and rallied, it's totally different from when they're down here, right? I mean, for me, it's just a big range trade. I mean, that should be your assumption until growth and earnings actually start to come out and about.
Yeah.
So first time, GCash online gambling transactions down 50% since the suspension last week. I think you've seen sharp movements happening in all your gambling related stocks. I think what is hurting more is the big banks. Like you've seen a sharp drop in BDO, BPI, and in Metrobank since we're all coming from a high base, not because business is bad, except that all the banks are just coming from really, really high bases.
What's doing well? Like yield issues?
Yield issues are doing well. You have your A-REIT, M-REIT, C-REIT, even RCR prior to the inclusion still did really, really well. I think everything has been a yield play, and even your defensives, Meralco,
water.
WC, these guys have been the ones outperforming because of yield.
GP, diba?
And let's be clear, it looks like the economy is really weak. That's the reason why your 10-year is looking like
the Philippines bonds were also added to a bond index, right?
I didn't see that.
Well, but anyway, paying go, weak. And it could be consistent with the bank selling off. Baka concerns with asset quality, diba?
I think that's an exaggeration. A little bit. People are worried about the credit card market. I don't know. I really don't know. That's the reason why provisions accelerated a bit last quarter. Nothing scaring yet in terms of NPLs, but provisions did accelerate across the board, and most of them blamed credit card loans.
Well, I think it makes sense.
Buy now, pay later to gamble
Titingin-tingin ako sa Reddit Parang uso nga yung grabe yung mga utang sa credit card, nakakatakot.
Well, any bright spot? DNL taken out. Any bright spot happening in the market?
SGP?
SGP lang. Ali. Is that a good sign? No.
SGP na lang?
It's a good sign, but I'm just
Wag na natin pag-usapan to. SGP.
very skeptical of
About travel, Cebu Pac, may ano ba? May headway ba?
So Cebu Pacific second quarter actually was pretty good. They did 3 billion core income. I haven't seen that in a while. I think the issue with Cebu Pacific is that business was largely driven by domestic and local traveling. Foreign tourists was still down. Sorry, it was flat year on year. I think the number is 2.9 million foreign tourists in the first half. This is still at 2017 levels. So this is not even close to where we were at the peak in 2019. So I think that speaks volume about foreign tourists. But don't get me wrong, a lot of locals are traveling. That's the reason why even hospitality in Ayala and SM Prime, I think most of them still did teens growth for hospitality and their hotels. And if you look at the message, it's because of local tourism, not because of foreign. All right, last things about the Philippines before we end.
Last one, yung gold sector was good. Gold sector here.
So what?
Yung gold sector, di ba? Yung mining sector, APX, and Rolex is doing. Parang yun lang yung nasa taas eh. That one.
Following gold, right?
But I mean, if you're gonna play gold miners, parang to me, just GDX lang. No GDX up 50% for the year.
These things parang late stage pa yung itsura.
It looks late stage, but they're just making too much money. Parang yung all-in cost nila is like half of the spot price today. It's making too much money.
I agree. Except that I don't want to touch anything. I feel like things are slowing down. So anyway, we'll get that to another day. All right. So with that being said, I think that pretty much ends our Gap and Go for today. We talked a lot about expectations coming from Jackson Hole and interest rates on dollar. Despite the change in tone and narrative coming from the Fed, it looks like the market priced that in somehow. And we're really seeing nothing change from current status quo. And I think that's our expectations because markets are just overbought. And we continue to talk about late stage. It doesn't mean the market cannot go higher. I think it just keep our expectations in check, right? And it's also the reason why you're seeing a lot of rotation happening into your small caps, IWM, some of the basura stocks that I don't know if that's the right word, but the basura stocks that Brian talked about a while ago. We're even seeing rotation happen into Hong Kong and China. And will we see a rotation to the Philippines? Still anyone's guess. I think Brian and Jason are more positive than me. I am slightly more I'm not bearish, let me be clear, but it's just that hard to be really excited about the Philippines, especially when growth is looking as bad as it did in 2Q earnings. But yield is still the key. Philippine bond yields are still the best asymmetric risk reward in my opinion. That's also the reason why your REITs are outperforming and defensives as well. So with that being said, thanks guys, and I'll see you next week, 2 weeks from now. Have a good day, guys.
Okay.
Thank you. Bye-bye.